Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 18th of October, 2021. We're just about 6:40 p.m. Central Time. Now, if you take your cursor and you move it on the screen, you're going to be able to get an icon that shows. That's the invite to my live webinar this coming Wednesday, the 20th, at 12:30 p.m. Central Time. I open it at 12:15. You can come in if you got questions, listen to the voice, everything there. But don't send me SPDR ETF questions at that time. Do me a favor. Write them to me. I have all the futures charts ready to go. It is the SPDR ETFs, because there's thousands of them, that I ask you to send me ahead of time, and then we can get those going. All right. And I do open at 12:15. By the way, this is not recorded and posted on the website. And it starts 12:30. It ends promptly 20 minutes later. It doesn't take a lot of your workday from you. All right. What's going on? The curve yield keeps narrowing in. We see the dollar has sort of flattened out right here. Gold, while it's backing off, is still finding support in that 1760 level. Silver's finding support. Copper got a bit overdone. I've been looking for a pullback. Why? It was 4 days in a row with today's close over the upper Bollinger Band. So you normally roll to the right-hand side on that. When we look at the S&P 500 index, this is a weekly area chart of closes. You can see the market's over that 18-week. It got under it, but came back just the way it did back here. I know a lot of people are looking for tops. I'm not. If I get it, I'll go, okay, well, that changed the game. But I don't see it. I see the market doing the same thing that it's done. I saw that September, the down month, October, a very volatile month, and we'll see if November and December march forward with Santa Claus. We tapering. You can't tell me that's not built in already. It's the speed that the Fed wants to do the tapering at that'll be the biggest question. Will they get it done in 4 months, 5 months, 6 months? I don't know the time frame that they're looking at. I doubt that it's a real long deal. When you look at the S&P 500 index, it fought today like a son of a gun, and it ended up with good gains, 15 points higher. You can see that the market tonight holding on to those gains. When you take a look at this chart, you can see now when I put the swing line on the same chart, higher lows, higher highs. That means the trend is up. The market fought a battle between the 18-day average, the 100, and this was that big break in September. Now you've come back and taken out all of that. The highs in September, though, you have not taken out. They're back here, so don't lose sight of that. When you go to the weekly charts, monthly charts, that's an important number. So you're into that resistance at this point. And that coincides with the upper Bollinger Band. So you have a resistance point here in an uptrend, and you're overbought. Be careful. I don't think new money's coming in on an overbought condition. You're not even at the beginning stage yet, at least at this hour, of converting this into what we call embedded, where the market locks in like it did here and here. This market has got a big tendency to do that. Bull markets do that. And it will take a minimum of 3 days, business days, to do it. You're nowhere near that yet. The NASDAQ, same thing. I would look for some resistance in the market between where we're at and the upper Bollinger Band. You're already overbought. You've gone through the September break. The market has come back nicely, but resistance points are resistance points. In the Dow, lower low, higher high, a very different feel. Overbought, again, into the resistance. Now you're knocking on the doors of all-time highs in this market, coming up very nicely. So this will be one to keep your eye on to see if it attracts more buying. And in the Russell, just a bit too overbought to buy. Anytime you have a 7 in front of a slow stochastic reading the way you do there, I call that overbought. Trend is up. The market worked through all these, the 100, the 18, and the 200-day average of closes, worked its way back up, hit the upper Bollinger Band, and failed at it. That's what you'd expect. Remember, in a Bollinger Band, 95% of the time the market will trade within it. To get it where the market's going to really run, I'm looking back here, like this even. You'll come out of sideways action for the breaks, or out of sideways action for eventually a rally. Now, we haven't had big rallies this whole summer. This has been a summer where, in reality, the market has been slipping back a little bit, culminating with the September break. And now the question is that behind the market, and is it ready to do something else? When we, let me come back here. I skipped the VIX. Lower highs, lower lows. I think the pros will write puts at 1597, looking for this market to bounce to the upside into these key moving averages. The 30-year bond, I want to go back to that VIX. That is the daily, yeah. In the 30-year bond, battleground, crystal clear. So what was a sure thing? Oh, interest rates going to go higher, higher, higher. Well, since the end of the first week of October, you've waffled on that a lot, and now the market's sort of wondering just where is the Fed on all this. Long term, I do think that we're going to have higher rates, but nowhere near what I think so many analysts think. I am not in their camp that you're going up 1.25, 2 points from here. You got to prove to me that this inflation that we're getting is transitory or sticky. I know what's sticky in labor. I am not buying that the other is all that part because the supply chain issue, and that's what the market keeps fighting with. In the 10-year note, if you knew nothing else and you've watched my videos, what do you do the first time you hit a lower Bollinger Band? In unison, that's where I think the market's going to see short covering from. Right there, and that's where I think happens. Trend down, no question about it. Are we embedding, converting it? Well, you can't count today's action. So we're forced to go back to yesterday, Monday. Nah, you're just playing in an oversold market. I don't see anything fresh there. Dollar index has a higher high, lower low, momentum trying to point down. You're fighting at the 18-day average of closes. I don't see anything, but guess what? It will take this little bit of effort. If the market takes out today's low of 93.86.5 and closes lower on the day, you'd actually have lower highs. You already have the lower low. You'd be back in a downtrend. I don't think anybody's been looking for that to happen. In the eurocurrency, get up and over this high right through here. The 116.37 level goes over that. You're in an uptrend. You're already trying that now with higher lows, higher highs, but you need to close over that 18-day average of closes. In the British pound, very overbought against the upper Bollinger Band resistance, trend up. Remember I was saying how many people were going short? Commitment of traders don't lie. That's the positions on. These people were very wrong in that. And yet, I still think that the Brits are talking like they're going to raise interest rates. You know, so many people think that's a mistake. Whether it's a mistake or not, looks to me like they're going to be the first big boy, the G7, to make that move. Higher lows, higher highs in Bitcoin. Is tomorrow the first day pro shares are going to trade their ETF? It might be. So if they are, what they're looking for is volume to swell. Traders are going to flock to this. That ETF is going to be heavily traded. At the end of the day, they've got to match it up with how much they own in futures. I don't think people are going to flock and build the open interest in it. Why? For whatever reason, there's plenty of them with management costs and so on. People don't like when a futures contract has to keep rolling. You build into that the higher cost of interest on the roll. You build into it the other fees that go with it. But that interest is an enemy to the market. And markets are efficient. They build that in for X amount of days as you're rolling them through. But will it like the fact that this market just keeps going? Yeah, it will. You know, one of these days what the futures exchanges should do, again, I'm giving an opinion here, is make a futures contract that does not expire. What's wrong with that? I think it'd be a lot of fun, and that would change the whole game for the futures. Now, I'm sure there's regulatory concerns that I'm not that smart. I'm assuming that there's something there, but it'd be pretty clever to do that. Okay, Brent WTI. Look at how the market's just falling apart. So this has gone from a $4 difference all the way to $2.60, and in the process, WTI, American, has come all the way up. By the way, let's talk about the cavalry charge of Mr. Putin. Ta-da, remember, week and a half ago, I'm going to give you all the gas you need. I'm there for you, Europe. Today, Gazprom said, I didn't get that message. Now, that's the monster energy company there. And there was just an auction. And remember, this fuel has to flow through the pipelines until Nord Stream 2 is done, where it goes into Poland and I think the Ukraine, other areas there. That oil, it was not increased. What's going on? So could it have been that President Putin led the lone charge? He is the Lone Ranger in that case. He doesn't even have Tonto with him because Gazprom is Tonto. And if they're not with him, where's that energy coming from? At the end of the day, if Mr. Putin says you're going to give them oil, they're going to give them oil. It is not a presidency in the way you think of it. It is a presidency in the way these oligarchs, everything's fine, it's yours until you step on my toes. That's how it works, and his toes, the toes being President Putin's. We'll see. I was very concerned with that, and I think the market is very, very surprised. In the heating oil, look at the big reversal down. That was coming. Profit taking. Now, you got to be a little careful. Not too much, but if the red line closes under 79, you want to be out of longs. Let the market pull back. Winter's not here. It has been unusually warm for an October. And I just saw the 10-day forecast. It doesn't change all that much. So the natural gas demand is down. Well, if that's down, heating oil demand will be down too. When winter comes, we'll know it. It gets cold fast enough. Speaking of nat gas, looks to me like it wants to head down to that 18-day average, and I'll bet that that's where the market tries to find its support. So you put it together, interesting time. I'm going to repeat again. This Wednesday, the 20th, I'm having my live webinar. I want you to attend. Bring your questions. We can have a lot of fun. It's fast. It's very fast-paced. And if it's not, I just end it. I haven't had to do one of those yet where we end it. Another thing, I'm not going to do another one of these until mid-November. So this is the only one you're going to get between now and the next 4 weeks. Why not join it? It's free to come in. You get an invite from me, which I've already sent. If you didn't get it, here's your out. Just take your cursor, move it up until you get to the top of the screen, and all of a sudden our icon will pop out. When that icon pops, click on it, fill out the form, and away you go. Could it be any easier than that? You'll be all signed in. And again, if you're going to ask me questions on spiders and ETFs, please, please, please write me ahead of time so I can create the charts before the meeting begins. I don't want to waste the time creating charts on spiders and ETFs. There's thousands of them. There's only 40 or so futures contracts, main ones. So that I've got all done for you. If you have questions, call my staff, 866-973-2077. I'll see you tomorrow.